Okay then, let's get started. We've got our screen in front of us. On the left hand side I've got the workings, I've got all the T accounts that are empty at the moment, and on the right hand side I've got dead click. So we're going to refer to dead click as we go through each transaction. So here's my T account. You may have heard of T accounts before, so called because they look like a T. So we've got a line at the top, and just above that line I've got the name of each account, and I'm going to tell you what sort of account it is as I move through as well. And we've got the debit side and the credit side. So each account's got two sides, each account's got a debit, each account's got a credit. And if you remember, every transaction in our records has two sides to it, a debit side and a credit side. So as we go through each transaction, you'll see that it affects two accounts each time, and I'll show you as we move along. So it's quite a long example, but as I say, please feel free to pause the clip whenever you want to and just work along with me if you want. I'm going to attach the spreadsheet workings to this clip, so you should see that available for download, so you can literally follow me at your own pace. Pause the video whenever you want to, but I'm just going to go through and do it at the speed I'm going to work at, and please pause it whenever you're ready to. Okay, so my first transaction. So these are the books of an antique shop. I'm following this from a book, a brilliant book called Business Accounting 1 by Frank Wood. Brilliant book. Highly recommend it. If you're studying accountancy in the UK, which obviously I did, it's invaluable. Okay, so the following transactions of an antique shop in the accounts and extract a trial balance. So our first transaction is we started in business with £8,000 in the bank. So the bank account is an asset. It's got money in it. It's something we own. So it's an asset. Now we're increasing the asset because £8,000 is going into the bank account. So remember, dead click is all about increasing. So if we're increasing an asset, it's a debit. Okay. So this falls into this part of the equation here. We're debiting assets because we're increasing the value of an asset. So started business with £8,000 in the bank. So this is the bank account here. So I'm going to type into here. It started in business, so it's come from the capital account, which I'll explain when we get to. But in our T account, we always put the name of the corresponding account, the other side of the transaction. So in the bank, I will put in there capital, and the amount is £8,000. So I'm going to put £8,000 like so. And then we need a capital account. So I'm going to move down to the screen. Here's our capital account. So the capital is money owed by the business. So because the proprietor has started with £8,000 in the business, he or she is now owed that from the business to them personally. So it's a liability. It's a liability, although capital has its own heading. Capital is owed by the business. That's sometimes difficult to get your head around because if you're a sole trader, it's your money effectively. But we're speaking from the view that the business owes that back to the proprietor. So it's capital. We're increasing the value of capital. We're increasing the amount the business owes to the proprietor. So increase in capital is a credit. Okay, so we've got the capital account here. So I'm going to type in there bank because that's the corresponding account. And I'm going to put £8,000 like so. So that's our first transaction. So you'll see that transaction has two entries. It has a debit entry and it has a credit entry. Okay. Now we've bought goods on credit from the following persons. So we've bought 3 lots of goods on credit. So I'm going to do all the purchases at once. So purchases, this is like purchases of stock, items for resale. So I'm going to move down to purchases. And there we go. So I'm going to put all these 3 in at once. I know we should do one entry for, well, we obviously do 2 entries for each transaction, but I'm going to do all these 3 in the one account at once. So we bought goods on credit from the following persons. So purchases is an expense. Okay, there's an expense. We're increasing the value of purchases. Increasing the value of expenses is a debit. So in my purchases account, we're going to look on the debit side, and we bought goods from L. Frank. I'm going to put the names in first. From G. Buyers. Whoops, let me just retype that for consistency. And P. Lee. Okay, so L. Frank, it was £5.50. G. Buyers was £2.90. And P. Lee is £6.10. Okay, so that's our purchases. Now, we bought goods on credit, so we owe those suppliers the money. So they are liabilities of the business because we owe them. The business owes them money. So we're increasing a liability, which as we can see is a credit. So I need to find those individual accounts. So let me go down, here we go. So L franc, there we go. So it's L franc first. So the corresponding account is purchases. And L franc was 550. And then we're going to find G buyers, exactly the same situation. Purchases. And G buyers is 290. And P Lee, again, exactly the same, purchases for 610. 4610. Okay. Okay, so our next transaction is cash sales of 510. So, cash sales. So we presume this money's gone in the cash tin. So I've made an account for cash, as you'll see there. So cash is an asset, something the business owns. It's owned by the business. Could be a little petty cash tin, but it's something the business owns. It's an asset. And we're increasing the value of cash, so we're increasing the value of the asset. So it therefore goes on the debit side. We're increasing an asset, which is a debit, and it's cash sales. So the corresponding account will be sales, and the amount is 510. So we then find our sales account. There it is. Now, sales is also known as revenue. Sales, revenue, income, turnover, it's all the same. So sales is income, and we're increasing the income. Dead click increases. So increasing the income is a credit. So on our sales, on our credit side of our sales account, we can say cash because the corresponding account is cash and it's 510. Okay. Our next transaction, we've got paid wages in cash for 110. So we'll go back to the start. Now we're paying out cash wages of £110. So cash is an asset, as we know, because we own it. But this time we are decreasing the value of cash. Now, if you remember, dead click increases the value. So if we increase the value of an asset, it's a debit. So we're now decreasing the value of an asset. So it's a credit. So wages we're going to put in there for £110. And then we're going down to find the wages account. There we go. Wages is an expense of the business. We're increasing an expense. So it's a debit. So I'm going to put cash in there. And cash wages are 110. Okay, sold goods on credit to J Snow, K Park and B Tyler. So we've sold goods on credit. So they're all going to be sales, income, turnover, whatever you want to call it. We've sold them all on credit. So I'm going to enter these into the sales account. Sales are income. We're increasing income. So it's a credit. So again, I'm going to put all of these three in at once. So we've got J Snow for 295. We've got K Park for 360. And we've got B Tyler for 640. Okay, so that's those three in there. So now we need our accounts for these three people that owe us money. So they're going to be assets of the business because they're a debt to the business. We own the debt. Okay, so they owe money to us, so it's an asset. So we find their accounts, which I should have created earlier. J Snow, K Park and B Tyler. Now, J Snow, there it's J Snow. So J Snow is sales and it's going to be 295. So we've then got K Park. There we go. So that's sales and that is 360. And we've got B Tyler. I'm going to say sales and B Tyler is 640. Okay, now we're getting on. So we're getting on now. Bought goods for cash 120 is the next transaction. Bought goods on cash 120. So we purchased for cash. So cash is decreased. Cash has gone out the petty cash tin. Cash is an asset. Don't forget dead click increases. We're decreasing the value of cash. So we're decreasing an asset, which is a credit because it's the opposite. So it was bought goods for cash 120. So we're going to say purchases in there and we're going to say 120. Then we're going to move down to purchases in there and we're going to put cash. So purchases is an expense. We're increasing purchases. Increasing expense is a debit. So there we go. Cash, bought goods on cash for 120. Okay. Okay, so the next thing we've got is we've bought some more goods on credit from G Buyers and P Lee. So we'll put them in the purchases account first. We can stay where we are. So purchases, as you know, is an expense. We're increasing, so it's a debit. So we've bought goods on credit from G buyers 410. I'm going to put that in here. G buyers 410 and P Lee 1240. P Lee 1240. So once again, we find the supplier account, so G buyers. So don't forget, we owe the supplier. It's a liability. It's owed by the business. We're increasing what's owed. We're increasing a liability, so it's a credit. So G buyers is 410. So we're going to say purchases 410, and P Lee is 1240. So we're going to go there. Purchases 1240. Okay. Right, paid wages in cash 110. So it's the next week's wages. So we go back to our cash account. There we go. So don't forget, cash is an asset, decreasing the value of an asset, not increasing. So it's the opposite. So it's a credit. So it's wages, and it was 110. So then we're going to go down to find our wages account, which is an expense. Expense, we're increasing, it's a debit. So wages, once again, paid out of the cash tin. It's another 110. Okay. Next, we've got sold goods on credit to K Park and B Tyler. So we're going to find our sales account again. There we go. We've got two more sales, so I'll enter them both in one go. Sold goods on credit to K Park 610 and to B Tyler 205. So once again, we find the debtor account, so the accounts of the person that owe, the people, sorry, that owe the money. So I'm pretty sure one of them was, no it wasn't, K Park and B Tyler. Let's see if we can find them. There we go. So K Park is an asset because they're a debtor to the business, increasing the value, so it's a debit. So K Park sales, and that's 610. And exactly the same for B Tyler, that's sales, and it is 205. 640. Sorry, 610 and 205. A bit of a mind block there. There we go, 610 and 205. There we go. Okay. So we've done that. Next is bought shop fixtures on credit from Stop Limited for £740. So bought shop fixtures. So shop fixtures. Now, if you remember earlier on, I said about shop fixtures being an asset, something the business owns. We're increasing their value because we've just bought something. And we've bought them on credit from Stop Limited. So the description in there is Stop Limited, and that's for £740. Okay, so now we need an account for Stop Limited. So if we go down the list here, there we go. So Stop Limited, we owe money to, they're a liability. We're increasing a liability, so it's a credit. So we're going to put in here shop fixtures. Shop fixtures, and we paid £740 for them. I'm saying pounds, do forgive me if I say pounds, obviously. Currency doesn't really matter, we're just using numbers here. So shop fixtures 740, we've done that. Next is paid G buyers by cheque 700. Okay, so we've paid a cheque out of the bank account to G buyers. So the bank account's an asset, but we're decreasing the value of the bank account. So it's not a debit, it's the opposite, it's a credit. So we paid G buyers by cheque, G buyers, and we paid £700. Sorry for saying pounds again. I probably keep saying pounds, it's automatic, but currency's irrelevant. G buyers, let's go down to G buyers then and find them. There we go. So G buyers is a liability, but this time we're not increasing the liability, we're actually decreasing the liability. Increasing, it would be a credit, so therefore it's a debit. So we're basically reducing these figures here. So G buyers by cheque 700. So the bank account name goes in there and 700 goes in there. Okay, I literally only a few more now. We've returned goods to P Lee, which is 83. So P Lee, we've sent goods back. So we've already bought goods. So we've increased the value of the... Sorry, we've bought goods from P Lee on the P Lee account, which is a liability. We've increased the liability because we've bought goods. Now we're returning them, so we're reducing the liability. So increasing liability is a credit, reducing a liability will be therefore a debit. So P Lee, we're going to say returns. So returns outwards, we're going to say. And that was for 83. So I should have a returns account here. There we go. So the returns account, so the P Lee, it's on the debit side, so it stands to reason it's going to be on the credit side. Now this would normally be an expense in our profit and loss account. If we were increasing this expense, it would be a debit. We're decreasing the expense, so it's to the business's benefit, so it's going to be a credit. Okay, so it's what was it? P-Lee, so sorry, P-Lee 83. Okay, so we've got the credit side there and the debit side there. Right, paid Stop Limited a cheque for $740. So back to the bank account. Stop Limited's a liability, which we're decreasing, so it's not a... Sorry, let me start again. I do apologise for the confusion there. I'm on the bank account. I'm on the bank account, which is an asset. We are decreasing the value of the bank account. Bank account's an asset. If we were increasing, it would be a debit. We're decreasing, so it's a credit. Apologies for that. So paid Stop Limited a cheque for $740. Okay. So we're going to go down to Stop Limited. Where are they? There we go. So Stop Limited they were a liability. We owe them money. We're decreasing that liability because we paid for the shop fixtures now. So increase a liability will be a credit. We're decreasing, so it's a debit. So the corresponding account is the bank account, and it's for £740. Okay, so we've got 4 transactions left. B. Tyler paid us his account by cheque 845. So we can sail through this now. Bank account, an asset, we're increasing, it's a debit. So B. Tyler, and it's for 845. So we go down to B. Tyler's account. There we go. B. Tyler's an asset because they're a debtor. We're reducing the value of the asset. We're not increasing, so it's not a debit, it's a credit. So B. Tyler's account, we're going to say bank account there, and it's 845. Okay. 3 transactions left. We returned goods to L. Frank of £18. So again, it's purchases. So we've returned some goods, so just the same as P. Lee. It's returns outwards, if I could spell it. Returns outwards, and we returned goods to L. Frank, £18. So once again, we'll go back to our returns outwards account, and there we go. L. Frank, £18. Okay, so I don't need to explain that, but it's exactly the same as the previous transaction that we did. G. Prince lent us £1,000 in cash. So it's a loan to the business, so it's going to affect the cash account. Cash account's an asset. We're increasing the cash account, so it's a debit. So it's G. Prince. I'm going to put loan in there. You can tell I've done this before. G. Prince loan is £1,000. Okay, so I'll go down to the G. Prince account. Oh, where is the G. Prince account? There it is, G. Prince loan account. So the G. Prince loan account's a liability. We're increasing that liability because G. Prince has lent us the money into the cash account, so it's a credit. Increasing a liability is a credit, so the cash is £1,000. Okay, one more transaction. We bought a van paying by cheque 6250. So we paid a cheque out of the bank account. Bank account's an asset. We're decreasing an asset, so it's not a debit, it's a credit. And we're going to say van, which is 6250. Okay, and we therefore should have a van account. There we go. The van is an asset because it's owned by the business. We're increasing its value, so it's a debit. So we bought it by cheque, so that's bank, and it's 6250. Okay, that's all the transactions entered. So the next thing to do is to extract the figures for the trial balance. So we need to balance some accounts off. So that's going to be the next exercise, but I'll give you a little pause. Obviously I'll continue on the video, but I'm going to pause myself as well. So hopefully that's made sense so far. I do hope you've followed it or worked at your own pace, which is what I wanted you to do. So in the next step, we are going to balance the accounts off. Okay then, so what we're going to do now is balance the accounts off. I'm not going to balance off every single account because that's going to take far too long. So I'm just going to balance the accounts off that I need to, and just to show you how it works, and then we're going to extract a trial balance which should hopefully balance. And when we get to the trial balance, that will be a similar sort of thing to the report that you pull off your accounting software. When you pull off a trial balance, you'll now understand how it's made up. So, balancing off the accounts. So I'm going to start with the bank account. So when we balance off accounts, what we do is, so these two boxes here are going to be for totals. So these totals have to agree, otherwise the accounts will not balance. The accounts have to balance for our totals to agree. So we look at each column. So this column comes to 8,845. This column comes to 7,690. So this column is less than that column. So therefore we need a figure in here for it to balance. I hope that makes sense. So this column comes to 8,845. This column comes to 7,690. So we need a figure in here to balance off. So I'm going to put in here balance carried down. So carried down and brought down often causes confusion, but you're basically carrying it down to the other side, which we'll bring down in a second. But the difference needs to be the difference between 8,845 and 7,690, which happens to be 1,155. So I'm going to put that in there. So the total of this column will be 8,845. So we can enter that in there, 8,845. And the total of this column is also 8,845. Okay, so we've put a balancing figure in there to make the two columns agree. Okay, so what we would normally do then is bring the balance down. So I'm going to say balance brought down, which is that figure there. We're carrying that balance down, so we're bringing it down. It's 1,155. Okay, there we go, 1,155. So we look at the cash account now. I'm going to do something very, very similar. This column comes to 1,510. This column comes to 340. So obviously we need a figure in here to balance. So we're going to say balance carried down, and in the cash account is going to be 1,170. So now this comes to 1,510. I'll put that in there. And this column also comes to 1,510. And the balance again will be brought down, balance brought down, and it's going to be 1,170 because that's the balance we're carrying down from there. So hopefully this is making sense. Capital, I'm going to leave that because that's just one figure. The van is just one figure, so I'm going to leave that. The wages, there's nothing to carry down really. I mean, what we can do, we can still carry it down just to show you how it works. So obviously this column comes to 220. So this column has to come to 220. So what we're going to say is balance. You can either do it doesn't really matter, we do it on the top line or the bottom line. We could do it on the, always used to do it on the bottom line for neatness. So if you remember, we're using the phrase balance carried down here. So balance carried down, which is going to be 220. So that figure there will also be 220 because that balances. And the balance brought down is 220. We've had two transactions in the wages, so to carry that down, it's 220. Hope that makes sense. The shop fixtures, G Prince Loan and J Snow, they've only got one figure in. Sales, I'm not going to carry on balancing, you get the general idea, but what we'll do when we come to produce our trial balance in a second, we will pull the figures off of here and I'll show you how that works. But what we will do is we'll leave the balancing for now, and I'll just fill in the rest of it while you're away, just to save time. Otherwise this video is going to be hours long and I don't want that. But that's basically how to balance out accounts. So now we've done that, I will fill out the rest, and then we'll come back and extract our trial balance shortly. Okay then, so I've got my screen here with my T accounts, which we've just worked through, and I've got the trial balance on the right hand side. So I'm just literally going to fill in the figures from what we've just done previously. So we're going to go to the bank account first. Now the bank account we did actually balance, and it has a balance brought down of 1,155. Now the balance brought down is what you use, that's the sort of ending balance if you like. So just to explain that a bit more, into the bank account we had 8,845 amount come in. Let me say that again. We had 8,845 come into the account, and going out of the account we had 7,690. So we've got left 1155 in the account. That's where our account stands at the end of this period. So we have a plus balance, a debit balance of 1155 in the account. That's a debit balance. As you can see there, the balance brought down is the balance that we use. 1155 debit. So in our debit column goes 1155. So the cash account, very similar situation. The cash account, coming in, we had 1,510. Going out, we had 340. So we had 1,170 left in the account at the end of the period. It's a debit balance brought down. So that goes in the debit column here, 1170. I'm so sorry. Let me click on it, would help. 1170. Okay. Then we're going to look at the capital account. We've only got one balance on the capital account, and that's the credit balance of £8,000. So that's £8,000 in capital owed back to the sole trader, the sole proprietor. So it's a credit balance. So it goes in the credit column over here. £8,000. Sorry, pounds. You know what I mean. Now we'll look at the van now. The van is a debit balance. There's only one transaction there, and that's a debit of 6,250. So the van is a debit of 6,250. Now the wages, as I said just now, they're a debit as well of 220. We spent out £220, so that's carried down to the next period. So 220 is the debit balance on the wages. Now I'm just going to briefly go down and fill out the rest of the figures on the trial balance. So shop fixtures is just a debit of 740. G prints is just a credit balance of 1,000. Okay. J Snow. Now J Snow owes us £295. I'm not even going to apologise for saying pounds now. I keep saying it. K Park. Okay, so K Park owes us those two invoices there. So the total of which is 970. Okay, and L Frank. Now, L Frank, if you remember, is a creditor, someone we owe money to. So they, we spent out £550 with them. We bought £550 worth of goods, but we sent back 18. So the balance is therefore £550 minus 18 at the end of the period, which is 532. I say balancing off every single account would take absolutely ages, and I don't want to sort of waste any more time getting to the trial balance. Hopefully by now you know how to balance the accounts off, but you know, please feel free to go back to sort of try and get a refresher on how it all works. Now P Lee. So again, we've purchased £1,850 worth of stock, but sent back 83. So 1850 minus 83 is 1767 in there. Now sales, go back to the sales account, and basically it's the sum total of these figures here, which is 2620. So we're going to put 2620 in there. And purchases likewise, that's just the sum total of the account on the debit side, which comes to 3220. So we're going to put 3220 in there. And the returns account, which is a credit, they're both on the credit side, the total of which is 101. Okay, so we're going to put 101 in there. Right, now the magic should happen, I hope. Fingers crossed, guys, that this balances. So, this is our debit side. Our debit side comes to 14020. 14020. The credit side should come to the same. Let me see. 14020. We've done it right. Excellent. And that's a trial balance. So that's in a nutshell how to understand double entry, how to fill in all the T accounts you need, how to balance accounts off, and how to extract a trial balance. I realise it's a very summarised version, but hopefully it should give you an idea of how it all works. And that's just what I wanted to do before I moved on, to give you a refresher of double entry and T accounts and trial balances. So hope that's been beneficial, and I'll see you in the next clip.